Morning, everybody, and welcome to our quarterly economics survey event. It's great to have you here for the results for quarter four in 2025. For everyone joining us for the first time, the QS's largest and longest running independent business sentiment survey. It's been capturing the voice of British business since 1989 and is widely regarded as a leading indicator after spotting changes in the economy before other surveys and even before official statistics. The quarter's fieldwork ran from November 10th to the 8th of December, giving us a timely insight into the challenges and pressures shaping business confidence as we head into 2026. Today, we'll explore the national picture and then look at what the data means specifically for the Thames Valley. Let me introduce you to my speakers. I'm delighted to be joined by two of our regulars, I'm pleased to say. First, Stuart Morrison from the British Chamber of Commerce, who will take us through the UK-wide results and national trends. And secondly, Sue Staunton, Senior Partner at James Cowper Kreston, our sponsors for today, bringing a business advisory perspective to the findings. Going to hand over now to Stuart Morrison, who will present the national picture. Stuart, over to you.
That's great. Thank you very much, Tim. Yes, as Tim says, from the British Chambers of Commerce, and I'm here just to briefly talk you through the findings on the national level, the picture across the whole UK, and I have some very brief slides to share as well, which I'll just bring up on the screen now. Okay, so as Tim has discussed, this is from the Q4 2025, tail end of last year, and the results covered just shy of 5,000 participants, with a good mix of different sizes, sectors, and geographical spread around every region, every nation of the UK. And important to note, if you can cast your mind back to this time last year, November into December, it was when we had the UK government budget as well. So the fieldwork fell both before and after that period with big changes. So we'll touch where relevant on when the data showed prior, what the data showed prior to the budget, and then what it showed afterwards as well, where that's relevant. The key findings, what we picked up at the national level, is that overall business sentiment has continued to weaken. Pretty much across all the indicators that we collect sentiment data for, we've seen declines, and that seems to be largely driven by concern about taxation. What we noticed this time as well is after a few quarters of fewer and fewer firms expecting to increase their costs, we saw that tick up again this year. At the end of last year, firms increasingly worried about cost, especially from the cost of employment, and more are now looking to potentially raising their prices, and it'll be very interesting to see what that does to inflation more broadly. On that comparison between before and after the budget last year, what we did see was concerns, particularly about taxation, were higher ahead of the budget when the budget was then announced, and there were no significant increases in taxation for businesses. We saw that concern ease slightly, but certainly businesses remained in a heightened sense of worry even prior to the announcements that were made in the budget. So we can get into that in a little bit more detail. Appreciate there's lots of data here on the slide, lots of lines and charts. What this is looking at is businesses' sales. So on the left-hand side, domestic sales, on the right-hand side, exports. And within the charts, it's split between the black line for manufacturers and the red line for services firms. Now, I suppose the first takeaway and the key piece of analysis to look at here is the fact that pretty much all those lines are pointing downwards. In fact, all the lines are pointing downwards. So regardless of sector and regardless of whether it's domestic or export sales, the proportion of firms reporting improvements has declined across all four of those areas. And particularly for the manufacturers, so those black lines, they've now dipped below the kind of 0% mark, so into what we would consider negative territory, whereby there are now more firms reporting declines in their sales than they are reporting improvements. So not a great picture for either domestic or export sales at the end of 2025. Touching on something we spoke about in the introduction, that proportion of firms expecting their prices to go up. So if you see the chart on the left-hand side, you can see the roller coaster that prices have been on over the last few years, huge rises following COVID when we saw that incredibly high period of inflation, and then a general easing over the course of the subsequent years. The expectation of firms reporting pressures to increase their prices coming down, a bump up following the budget in 2024. And then what we're seeing now is that line start to creep up again. So while firms have been saying, okay, costs have been incredibly high for a long time, they were still the proportion expecting their prices to go up had been declining. That's now no longer the case. And if you look at the right hand side, we can see that the highest proportion, the highest area of pressure that firms are citing is in labor costs. So that's the red bar there. 72% of firms overall saying that labor costs are where they're suffering price pressures from, and higher for other sectors like manufacturing and hospitality, 80% and above from those sectors. So cost concerns becoming increasingly prevalent in the businesses we're speaking to. What we've seen with regards to the labour market is that firms are now less likely to expect the size of their workforce to increase. That's been coming down steadily over the past few quarters. And in line with that, and in line with what we've seen in the official unemployment statistics, we're also seeing the proportion of firms citing recruitment citing recruitment difficulties, I should say, coming down as well. So firms finding it easier to find the staff they need. Certainly still high by historic standards, but down on the last few years when we saw record high levels of recruitment difficulties. When it comes to investment, we've seen now 5 quarters in a row where there's been a higher proportion of firms reporting a decrease in their investment than an increase, and that's now continued this quarter as well. So investment continues to be a real sore point for the businesses we speak to, and they're still unable to invest at the level that we would really like to see for the economy. Overall levels of concern. So we ask businesses, what's more or less of a concern than it was 3 months ago, and a variety of different things in there. The first thing to know about this chart is the size of the bar overall. So that reflects the number of different concerns that businesses are citing, and overall we've seen that level bump back up again, almost back to the levels it was at the mini budget, if you can remember back to 2022. More and more businesses citing a variety of different concerns. Primarily, it's taxation that's the most commonly cited concern. 63% of firms saying that. Inflation also high at 56% as well. This is one where it's interesting to look at pre-budget and post-budget. So this is looking specifically at the proportion of firms who cited tax as more of a concern than it was 3 months ago. You can see pre-budget, 68% of firms were saying that, we are much more worried about tax. Primarily, you can presume because they're worried about further taxes being announced in the budget, as was speculated about beforehand. Following the budget, when no significant new taxes were announced on business, you can see that dropped away down to 68%, down to 61%. So still high, but much lower than it was prior to the budget, showing us a slight sense of relief from businesses that there was no significant hike in their taxes in the budget. What all this means for business confidence, when we ask about expectations for turnover, you can see that it's continued to decline. Pretty much from Q4 2024 onwards, we've seen a steady decline in the proportion of firms expecting their turnover to improve, and that pessimism has continued into the end of last year as well. When we asked for open text feedback, so just asking businesses in their own words to explain, what's going on and how they're feeling, you can see that the main things that come out are concern about rising costs, particularly around taxation, levels of confidence, still struggling, excuse me, and thirdly, weak demand and paused investment in both training and capital investment as well. Excuse me, we've been clearly talking too much, so we'll bring you just to the last slide, which is some examples of those comments that we collect, and you can see really the detail we get from businesses like yourselves participating in the survey, giving real valuable insight into the issues that you're facing, and the opportunities you see in the future, particularly around cost, confidence, and pauses in investment. So those are all the slides I have to talk through today. You can see that the timeline here for further survey and further research throughout the year. So please stay engaged with Tim and with the Thames Valley Chamber. He'll keep you up to date on all the research opportunities that are taking place and where there'll be valuable insights into how other businesses are feeling. I will stop sharing there and I'll pass back to Tim.
Perfect. Thank you, Stuart. Thank you, Stuart, from the British Chamber of Commerce with the national picture of business sentiment across the UK. But now, for a more regionalised view, I'd like to hand to Sue Staunton from James Cowper Kreston. Sue, over to your good self.
Thanks very much, Tim. Well, I don't think it's any surprise that the Thames Valley is very much still mirroring what's happened in the wider UK survey. But there are some particular differences, I think, in that, the skills that still feeling as they felt, as Thames Valley businesses have felt for some time, an enhanced level of skills shortage compared with the rest of the UK. And I think, we're in times of considerable challenge for businesses more widely, as picked up by Stuart just now, reducing demand from customers and clients, and rising costs and persistent uncertainty. And I think it's actually that uncertainty, and that came through in what Stuart was talking about as regards the tax concern, the heightened concern pre-budget. It comes down a bit post-budget, but it's still not, totally assuaged, because there are wider concerns about, what might happen that we don't know. Although we're supposed to be on this cycle now of one annual budget, nonetheless, I think businesses, and certainly businesses we talk to, are very concerned about, well, if something goes wrong, there might be an emergency budget. So therefore, it's planning within that context. And I think because there have been so many uncertainties recently, and certainly across the last year, that leads businesses more and more concerned. And actually, I think, rather than actually individual things particularly, it's uncertainty that is the biggest concern for businesses, and just not knowing what they're going to do. I mean, we had this over the last few days, of course, with the prospect potentially of more tariffs from the US, 10% now, 25% in June, if Greenland doesn't cede to US demands. And all of that just brings more and more uncertainty. Is our customer base going to drop? Are we going to have to think about doing different things, and so on? And I think, against that background, clearly consumers are becoming more cautious. So that means demand has softened, and with rising costs, particularly in terms of labour, which of course again has come through partly through government intervention. And those sectors there that are particularly affected will be those that have the lower paid workers. So hospitality, I know, has been talked about a great deal. Also retail, and elevated prices on fuel, utilities, and of course raw materials, partly because of tariffs, and also of course political instability from a more global perspective as regards fuel and those sorts of costs. So it's not a great picture, I think. I think the Thames Valley has always been a more prosperous region of the country, and I don't think that is particularly changed. But the fact that the region is feeling an increasing squeeze upon itself is not great news, really.
Thank you very much, Sue. My thanks to both Stuart and Sue for their overview here for both regional and national. I think we can see the overall firms are navigating a challenging environment with both weakening demand and rising operating costs. Concerns about tax peaked before the Chancellor's budget, although the November budget helped, those worries have been partially eased. Business expect further increases driven mainly by higher labour costs linked to new legislation rather than improvement in margins. And while recruitment intentions have picked up, actual employment level remains under pressure, with skills shortages continue to hold back many firms. So sentiment remains cautious. Looking ahead, confidence is likely to stay subdued unless demand improves, interest rates fall further, and government policies create opportunities, not obligations, for business. I'd like to finish on a call for action for those of you watching and reading. Our quarterly 2026 economic survey opens on the 9th of February. Please take part and encourage your colleagues and your networks to join in too. We'll be back this time in face-to-face on the 17th of April, where we'll be joined by Stuart once again and Sue, along with Reading MP Yuan Yuan. Together, we'll unpack the Q1 findings and finding out what they mean for our region in 2026. It just remains for me to say thank you for watching, thank you for your membership, and thanks for your engagement and your continued support through 2026 with the Chamber. Thank you ever so much, and goodbye.